What? What up, everyone? How are we doing? It's actually so nice to see you guys. Welcome in. Let me get a paper towel. Happy to be here. What's up, Professor M? How are you doing, man? We'll go through the wastelands, through the highways, till my shadow turns to sun rays, and on we'll go through the wastelands, through the highways, and on we'll go. All right, guys, what's up, everyone? Hope you guys are doing well. We're just gonna give it a few more minutes for people to join in here. I just wanted to say thank you for being here tonight. We got lots to talk about. It is a late stream. Hopefully you guys, wherever you are cozied up, or maybe you're at your desk ready to learn, because we're going to be talking about a lot. So we're going to be talking about the current markets. For those that are watching after the fact, I like to say this early on so you don't get, you know what's going on this stream. We're going to be scanning for trades, but we also are going to be going over current markets, my thesis, reviewing some trades from the Rader Report. It's going to be a decent stream, but hopefully I don't go too long. I'm going to push this to just about an hour. So we're going to kind of move things through fast. So this will be about an hour stream, but we will make it count while it's here. So with that being said, we're going to give it a few more minutes. Now, what I'm going to do today is specifically, we are going to go over the SPY, because there's so much to talk about here. And for the sake of, screw it, we'll do this. Let me get my glasses on. Hold on. Also, the relationship between the prediction of any presidential winner and the market drop today. Mr. Rosenberg, I'm confused. Is that a question, a statement? What are you trying to say? These are blue light glasses. I don't need to be blinding myself with a big white chart right before I go to bed. So, question, was there a relationship between the prediction of any and the market drop today? Oh, okay. No, there wasn't. Question, did you get my message on X? You said last time to write you on X if you have a question, but I never got a response. I said to tweet at me. I don't respond to DMs on X. But if it's important, you can just ask it here. If you can touch upon this, because someone told me that if there's a Republican winner, they're usually against spending, which automatically means less money in people's pockets. Well, Rosenberg, what you have to understand is this, man, and this is a good topic for any of you guys. Also, someone commented on my last stream and said, Rader, stop eating on stream. It's unprofessional. No, right. So, what I've done today is I've cooked up a mocktail. I don't drink alcohol. Mocktail with an M. It has coconut, mango, and white grapefruit juice in it. It's pretty good. I got nuts. chocolate chip cookie into PB&J. So that's what we're gonna be doing. I'm starving. I just worked out. Yeah, professor, right? Railing lines. That's funny, bro. If you can touch upon this, yeah. So, Rosenberg, you have to understand this. What happens in the White House does not really affect stock markets. It does, but let me explain. The markets are always pricing in upwards of even, sometimes even years in advance, several months in advance. Like right now, we're probably already pricing in stuff for next March. Think about that. So a lot of this stuff that you're hearing that, if Trump gets elected, that means less people in money's people's pockets, and that means markets, it's all BS. Okay? It has nothing to do with the stock market. The stock market is all about the future outlook of the U.S. economy, and it only cares about certain things, right? We're at all-time high, yet unemployment was spiking, right, to nearly a high, right? So how does that work? Well, again, it's not about now, it's about the future. And so there are some theories you can come up with. Like, for example, one is that, this is one of our theories that I've been talking with a lot of the people I trade with, is that if Kamala Harris is elected, we will likely see 2 to 3 more years of upside in the markets. But you will see a bigger crash or a bigger rally towards the end of that presidency. Likewise with Trump, you're likely going to see a crash right away, but to a smaller degree, and then see more positivity into the end of the term. So that's typically that's actually what a lot of people are banking on, at least in the professional realm. That's a theory. But I wouldn't take that to heart. I wouldn't take it as something that's actionable or even something you should be worried about. But majority of trade ideas like that, they don't care about the White House. A lot of these headlines, and I'll show you this tonight. This is a great topic, Rosenberg. I do want to show you this, that a lot of the times to justify moves in the market, they will just print stupid news headlines to justify why it moved. But I'll show you tonight that that's not the case, and that all that really matters is market mechanics at the end of the day. Okay? How the market actually works. We'll get into that. Let my boy cook. Question. Do you think the Chinese stock market will keep going for no reason? As far as I can tell, it has just news and the government was going to pump. Yeah, man. Again, it doesn't matter about, and this is also a great point. Whatever you think about the outlook of China's economy, what matters is, right? People are saying, the stimulus didn't fix, the stimulus didn't fix the underlying issues, and Chinese still have all these issues going on. It doesn't matter. The mechanics of the market, people got squeezed here. There were so many people short that you're going to have short covering for likely months. So shorting Chinese stocks is going to be a good trade? Hell no. Okay? It's all about the mechanics. It doesn't matter what the news is. The news is irrelevant. Okay? It doesn't matter about, the economy, the economic numbers. None of that matters. Markets and economy is different. Okay? But that's that. But that's that. Okay, so with all you guys in here, we'll give it about 2 more minutes or so. But this is what we're going to do. I'm streaming way too late for a lot of people, but it's okay. So what we're going to be talking about tonight is specifically with the SPY. We'll talk about some other stuff as well. But first thing we can do is talk about the SPY. Today, of course, was super boring. Why was it boring? Because we are in an October seasonal. Okay? Every October, we enter a rebalancing period. Let me show you. Let him cook. So right here, this is the seasonal chart for SPY. Okay? And this shows the price action tendencies or the behavior of the markets over the last 10 years during certain times of the year. Almost every October, we get a rebalancing period. Why is that? Because let me back this up. There are 4 key expirations during the year. These are called quad witchings. Okay. They happen in March, June, September, and December. Okay. These dates during these months are where derivatives expire on the same day. They're called quad witching. Futures and options expire on the same day. And typically with this comes a lot of rebalancing. And all this rebalancing, from a fundamental standpoint, is around earnings. Obviously in March, you typically see better outlooks for earnings, which is why you see a bigger rally into tech stocks, things like that. I digress. During these 4 quad witching dates, trillions of dollars expire from the market. That money gets lifted off, and now they have to start pouring that back down in. We've just come from one of the most bearish seasonal times of the year, from August into September. People are selling. People are getting out of what the rally from July. People are selling because of the negative news, perhaps, all these other things. A lot of negativity into the end of that is the outlooks diminish for a lot of the earnings, et cetera, et cetera. Okay. Now you get into October. October is one of the most it is the most volatile month of the year. October is extremely volatile. Why? Because it's the month after September, one of the bearish times of the year. But September 20th was the last quad witching. Trillions of dollars got lifted off of the market. And that is what sparks such a big rebalancing period, is after such a big bearish time in the year, people are done selling. People are starting to reallocate a lot of this money. And it creates a lot of volatility because there's a lot more spaces of the market are getting activity. And, a lot of profit taking, a lot of people dumping, the positions are up 3,000% on, et cetera, et cetera, et cetera. So that's kind of the weird, lame version to explain seasonals. But seasonals right here this month, the most volatile time of the year. October is extremely important because this is typically the seasonal bottom where you actually see a rally into the end of the year. Now, what does that rally look like? Is it a market-wide rally? Is it only a few sectors? That differs. But right now, we have to understand one thing, that we are in October. And that's exactly why you shouldn't be trading the indices right now. SPY, QQQ, Dow Jones, IWM. These guys are all going to roast traders' buns. Every single October, it's the month of pain. It literally is. Every single October, you get an absolute pain cycle. You just get pumps, dumps, pumps, dumps. You just get all of it. All in 1 month, you get a lot of pain. And the purpose of October is to actually shake as many positions out as possible, get them all out of the market, and then you can have a healthier move to the upside in a fresh rebalancing period into the end of the year. So that's what you've actually been seeing in the S&P 500. And if you don't believe me, literally look at, from the quad witching, which was on the 20th, look how the behavior of the market changed. Look at this, right? This is the 20th. We went from straight pumping up to then just instant consolidation. The behavior of the market changes after quad witching because people are rebalancing. And this rebalancing seasonally was expect chop, expect nothing. So if you are trading the SPY right now, the odds are you are getting your pants rinsed. Okay. Please, can you fix your screen so the corners are cropped? No, it's not that big of a deal. But also, my screen is a different resolution than the output of YouTube. So too lazy to fix it. YouTube streams at 1920 by 1080, and my screen's bigger than that. So that's that. Now, I also like to be able to manipulate and stuff. So zoom in, you know the deal. But it's not that big of a deal, bro. I promise. You can see the ticker and you can see the chart. That's all that matters. Dream, thoughts on China stocks? Wouldn't touch them with the 10-foot pole, bro. The opportunity's over. A lot of people are chasing. Retail's chasing. They're all losing money. The trade was 2-3 weeks ago. But momentum is still to the upside, man, this week especially. Huge put sellers on the flow and everything. So I wouldn't short it or long it, anything like that. Just stay away from a derivative standpoint especially. Now, with that being said on the SPY, I cannot see the ticker top left. The ticker's right here, dude. SPY. Moving away from the SPY. So when we come down in October period, I really want you guys to understand this, okay? That when we come to a new seasonal point, okay, just how I showed you that the behavior of the market changed, you have to come to a new place of mind. You have to change your trade plan. You have to change not only what you're trading, what you're looking for, but also how you actually approach it to begin with. When we approach October, I'm thinking a few different things. Number one, I'm thinking it's October. It's extremely volatile. So what does that automatically mean? Well, it means that I want to be in names that aren't going to just U-turn like the indices. So stay away from the indices. October is also the seasonal bottom, right? So what's the better trade, the downside or the upside? Well, a lot of the times it's actually a downside into late October. For the short side, you could probably stick to more day trade styles instead of swing trading to the downside, because again, you are at a seasonal bottom and the longer dated swing puts are going to get clapped most likely. So stick to shorter time frames on the puts, stick more to the long side, find a bias in the long side, find those upside trades, because again, we're in a rebalancing period. If money's moving around, there's going to be a lot of stuff moving to the upside, especially growth. So those are just a few different themes I'm thinking about. Stay away from indices, stay away from shorting long dated, look for the upside, and understand that, well, is there any other themes that are important right now? Of course there is. The Fed, of course, cutting rates, names like solar, names like biotech, names like, rate sensitive names in general, banks. These guys are going to likely see a lot of relief into this October bottom, this seasonal bottom. So with that in mind, I have this general context. And we talked about this in a previous stream before, but I always like to build context before I move into actually finding a trade. Because you guys you have to understand this. Before you find any trade, you can't start on the charts. The charts are one of the last places you end up before you decide on a trade. The charts are literally one of the last places, because the idea into that chart matters more than the chart structure itself. And I say this all the time, that in the market, there is thousands of head and shoulders, thousands of patterns out there across different time frames, across different stocks, across different assets. So why do you believe that the head and shoulders you're looking at, again, I don't trade patterns, but what is your reasoning behind the head and shoulders you're looking at on Tesla? Why is that a better one than the other 5,000 that are in the market right now? You probably couldn't give me an answer. Oh, but Elon Musk's robo-taxi is it's expensive. And no, don't give me that BS. None of that matters. It's a logical fallacy that a lot of traders fall into, right? They believe patterns, but they don't believe all patterns. Well, wait a minute. Well, then what do you use to justify it? It's the input that matters. It's the input into the chart. It's the idea behind what validates that price action. You see strong price action, you better have an idea that validates why that's strong price action. A stock could be chopping at the high, that's strength. But if the idea behind it doesn't justify why it's doing that or why it would break out, you have absolutely no edge in the market. Okay? And I'd like to believe, at least the way I was taught, that the best way to determine that is understanding the mechanics of the market, how the market actually works. Because if you're a mechanic, well, the mechanics referring to how the gears turn, right? But if you understand how those gears turn, when there's an issue with them or when there's something that pops up with the gears, if you understand how they work, you will be able to repair them, solve them, and know what's going to happen next. But if you don't understand how gears work, you're not going to understand the problems that arise with them. You're not going to understand how to fix them. You're not going to understand what you can do to profit and solve from them. So that's kind of that, okay? I cannot see the ticker top left. Okay, I got you, man. I got you. I got you. Don't worry about it. Don't worry about it. I got you, bro. I got you, bro. Don't you worry about it for a second. Don't you worry about it for just a second. Hold on. Let me get this. Why can't I? Okay. There we go. Okay, we're going to get this real. Can I get a yes in chat if you guys can see the ticker? Guys, just type yes in chat if you can see the ticker, please. Can you guys see the ticker? Yes or no? Perfect. Perfect. Yes. Yes. Okay, good. Okay, so that's what. Okay, I need to remove this ridiculous thing off my screen. Okay. But that's that, okay? So hopefully you guys understand this lecture. And the reason I say this, the reason I start with this first, is you guys have to understand the biggest trading lessons are going to be outside of the charts. Technical information, all this stuff is pretty easy to understand. Just a couple 100,000 hours and you'll be good, okay? Now, as far as all this stuff right here, as far as SPY and all this goody stuff right here. SPY right now, of course, we're not going to trade this. We're not going to trade the major indices because this right here is going to chop. It's going to cause a lot of pain, and this is not where the opportunity is this month. Now, there is an opportunity for leaps for January calls, but that's a whole different story. I'm not going to get into that necessarily tonight. Okay, with that being said, what are we actually looking at? So we've developed this kind of context with the market. We have to get more specific though, because we have a lot of these ideas that, okay, we need to find what's getting rotated into. We need to find what's getting rotated out of, right? Certain things are moving like the SPY, so we know to stay away from them. Where does that land us on the chart of finding an opportunity? Well, it lands us a little bit closer to understanding, okay, what are the rotations? And the best way to check the rotations, I'm actually adding a tool to the Rader Report very soon to show this, but we will show you right now. So this is, boom, I will show you this right now. So in context that we just had quad witching. Quad witching, again, trillions of dollars in assets or derivatives, expired, and you have all this money lifted off the market. Okay, so that kind of brings the question, right? What are they favoring? What are the hints they're giving us to show us, you know, what is the favorite trade for? Sorry, this is like completely broken. What is this? Today. Okay. So what is the favorite rotations? What are going to be the favorite rotations into this next period? Well, you guys, a lot of you know that I already caught a big portion of the energy. Energy was the previous one that I caught. And this was, here, I'll show you right here. We'll talk about last week's report because this is super, super important. RG chart, you've been following along? That's huge. Awesome. What's up, guys? Comment, you can add the ticker and description in the background. I know, but that's like annoying. I'm not going to do that. Bro, no way this crashes every night when I get on this. No way, dude. All right, hold on. Give me 1 second. Okay, we'll just talk about now. But that's that. But you guys know that a big portion of my trading has actually been in energy recently. One of the biggest names that I've caught was, of course, energy. Energy, we caught this huge pump off of the low. My calls went just shy of 500%. But this was a massive trade. CVX as well did very, very well, 300% on that. These right here were kind of the best first rotation was energy. It was the most beaten down. It was one of the most beaten downs. It certainly did not receive any love since April. And this was a name that we expected, you know, hey, you know, if they're going to rotate trillions of dollars, they're rotating out. Because think about it like this. If you guys saw my recent Instagram video, let me back this up. Let me explain this a little thorough so we can get moving on here. The reason quad witching, again, trillions of dollars gets lifted off the market. Asset managers are funded by the people. The people fund the firms and the firms invest their money. Clients don't want their money sitting out of the market. So that's why firms are always reallocating. They're rotating. They're never going to take money out and just keep cash. That's not why investors give their money to firms. Okay? So with that principle in the back of your head, you have to understand this, that when all that money expires in derivatives, they're going to need to open new positions. And those new positions, options, futures, etc., are all going to trickle down in sectors that likely didn't get enough love or that are relevant to the current times. What are they going to sell to fund that? Right? What is that money expiring from? The leaders of the previous trend, right? Anything that went absolutely nuclear in the previous trend, the previous quad witching or whatever, that previous period is going to get sold off. It's going to lag. And as it starts to slow down, which was like mega caps, if you guys haven't noticed, mega caps like Apple, these guys haven't even broken the high since July. The markets have. The overall markets have. So how is it, right, that what's happening here? It's not crashing. No, you're right. But they're rotating out of mega caps. And they're rotating out of mega caps and putting that money somewhere. That somewhere is exactly where we can find an opportunity. But also where they're rotating out of, right? You can short these names. So with that in mind, we had to understand what were going to be the favorite names. Using some of that context, what were the favorite names going into October? Well, so far from the 1st to the 4th, and we got a little hint before this, you can actually see, right? Energy, we knew that. We traded that already. But semiconductors, ooh, semiconductors, right? Now, a few days ago, this wasn't the case. Semiconductors was actually pretty beaten down. But if you did some big brain analysis, you could have determined that semiconductors was the one to move next. And I'll show you my trades with this. So we have clean energy. What is clean energy, solar energy? What does that all have to do? Well, it fits along with the rate sensitive trade as well, right? The rate cut trade. You also have technology over here. You also have internet stocks, regional banks, right here, banks, airlines. This is huge, right? So a lot of these names, right, are newer sectors. And what we're ultimately trying to find, using that context, is the new empires. We're trying to find who is going to dominate the markets next. You guys, a few years ago, remember AI. You remember any conference call with the word AI, tons of money poured into it. These manias are started from rotations like this. There's always a new trend, right? Think about money managers. Think about them like TikTok kids, right? They're on the stock market brain rot, okay? They're on the stock market brain rot, and they're trying to find a new trend. And when they see Jim Cramer throwing it back, they're like, oh, yes, I like that. Double tap, comment, you look good today, baby. You know, like how the old boomers do on social media, the real creeps. Like, if you go on X, you'll see, like, can I lick your feet? Like, bro, what? Under, like, the OnlyFans model ads from those stupid news Twitter pages. Anyway. That's what the markets are like. They're always trying to find a new trendy thing to get on. Okay? And Kuwani says, can't see the ticker. Shit. My bad, bro. Let me blow that up for you. And please, guys, let me know in chat if you can. Can you guys see the ticker now? Is this good? Can you guys see this? Yes or no? Can you guys see it? Bro, speaking my language. Okay, there we go. Can you guys type yes in chat if you guys can see it? Can you guys see it? Yes. Okay, yes. Not really, but I'll manage. Okay. Okay, awesome, guys. Thank you so much for your help, guys. Thank you. But that's that. So as far as this right here, this is super, super helpful. So when you see the trends come in, there's always, and again, these trends start after quad witching. Why? Because think about it like this, right? Again, money managers can't pour all this money in until really the quad witching time is up, because again, that's where all of their positions are tied to. So that's really when you see a big rush, a big change in empires. We're looking for the new empires. And from my research that I talked a lot about on the last Rader Report, one of the new empires was definitely energy, but this week it was actually big signs that it was actually going to be in semiconductors, right? That semiconductors were likely to get a big rotation. Why does that make sense? Well, semiconductors is growth, number one, it's October, right? It's the seasonal bottom, so it makes sense that markets would rotate into growth after such a big selling period. But also that these names in general have been quite neglected. If you look at a lot of the semiconductors, if we just look at SMH, these haven't even, they're like miles off of their July high. And if you want to talk about that from a relative strength perspective, well, the overall markets are above their July high. So relatively speaking, semiconductors are quite beaten down. And so that gives a lot of justification to, well, if you're expecting a seasonal bottom, the most beaten down sectors are the ones that get the biggest rotation, the fastest rotation. But the leading sectors, the ones that are outperforming, get the longest continuation. Let me say that again. In a macro bottom, in a seasonal bottom, the laggers get the biggest, or not the biggest, the quickest bounce off of the low, the first rotation. And then after that, the leaders of that bottom get the longest continuation. Sometimes laggers can turn into leaders off the low and continue to go. But you have to reassess after that bottom has already formed. So with that being said, semiconductors was a name that I was targeting, right? But our hunt for an opportunity doesn't end there. So we have at least a name now. We have at least a few sectors. We have airlines, we have banks, we have energy, we have semiconductors, we have retail. Okay, so we have about 5 sectors. So see how we went from a context, broad market analysis, broad market understanding, to now we have 5 sectors and industries. We're getting narrower, right? We went from the whole market down to just a few. So now we're getting closer and closer to an opportunity. And this is where your real work begins. Most of that stuff is intellectual ability. I don't expect everyone to understand how to get those ideas. It just comes from experience. The background is tough, yeah, isn't it? Certain names did not run up today, such as AVGO and AMD. Are they going to catch up this week? So I'll get to that. We'll get to that in a second. I actually think that's a great segue here in a minute. So stay tuned. I'll talk about it in a second. So now that we have 5 sectors, very unprofessionally, Rader is taking a walnut from his plate, unprofessionally, in his own apartment, unprofessionally. He's going to take a bite of his food unprofessionally. How unprofessional, Rader? He's eating on stream. How unprofessional. So that's that. So now we have 5 sectors. I want everyone to type yes in chat if you guys are somewhat on board with where we're at right now. So we're at 5 sectors. Are you guys good? Type yes in chat if you guys are good. So basically, Rader likes nuts. Get him out. Get him out. Get him out. Get him out. No, I just got here. Goody. Bro, I bought some Microsoft calls. Okay, so he bought Microsoft. Oh, this guy needs to show up to the streams more. Why are you buying Microsoft? the worst performing mega cap. How do you earn the mechanic of small caps? How can you trade them? I mean, I don't even know what that question is like. It's so broad. I don't even know how to answer that. Okay, good. So most of you guys are on board now. Okay, so we've now narrowed it to 5 tickers, or at least 5 sectors, okay? And those were relatively these right here. Software, you've got some, XLF, jets. I like a lot of these, okay? But again, like I said, our hunt is not done for an opportunity because not everything in those sectors and industries is going to offer something that's good. So once we have a valid input, again, this is the funnel. This is the mental funnel, okay? We're getting to the peak of the funnel. We're getting close. Now we have to go in and scan the individual sectors or find an idea within that space by finding a seasonal that supports it, by finding the options, any options market data that supports it, and by finding a technical idea that supports it. So strong price action or weak price action if we're shorting. You also want to see some sort of option flow maybe that justifies an idea. You want to see maybe a derivatives imbalance, maybe some sort of OI structure. And then preferably, of course, we know the seasonal strength is into December, but is there something else that we need to take note of? Okay. And we'll get to that in a second. I think Juan, I think Juan, Gar, you had a great question. I'll get to that in a second regarding that. So now our job is this. Now that we have a general list of tickers, there's a few different things we can do to help filter out what we're doing here. Okay. So the first thing is to go in and individually scan each sector. And one way we can do that is go to this right here. And we can just simply copy a lot of these sectors. So let's go look at, for example, we could go look at jets. Okay. Or we could go look at KRE, OIH. But I'm more specifically interested in, let's go look at softwares. So what we can do is use something like an RG chart. And we can just go find a ticker list, right? We can go, okay, so how are these names performing? Which ones are relatively the strongest within this specific industry? And we can go and we can do this, boom. Okay, so obviously, right now they're actually underperforming SPY quite a bit. But if we do look at the 30, there are some good ones. So SNPS, I don't really like that one. Adobe, maybe we can look at that one. Microsoft, I'm staying away from. So again, this idea is just to go put some tickers in our head. SNPS, super weak. I'm not going to trade that. What about INTU? Super weak. I'm not going to trade that. What about CRM? Okay, so that's really strong. Of course, you guys already know I took a trade on that and caught the entire breakout. But we're not going to talk about that. So that's super strong. So this is a software name. This is CRM. Then we can also do, what about... again, we're just scanning some software names. What about ADBE? Super weak. Let's not do that one. And again, I'm going through just the technicals. I'm seeing, is there actually an idea that supports strength here? Okay, let's talk about CrowdStrike maybe. Okay, so this is a lot stronger than a lot of the other names. So this is a warranted idea. Again, just pro tier technical analysis. But that's something that you're looking at. So what you can do is then go scroll. You can go find setups that have strength. Again, if our idea is to long these, we don't want to be looking at something like ADBE and going, oh my God, I'm going to buy calls on that. Out of all the stocks, you're going to buy that out of softwares. No. Okay. Yes, D-Dog as well, Juan. So D-Dog, this one is strong. Okay. So this is something that you need to take note of. D-Dog is strong, right? It's breaking out. It's closing near the high. Great idea. So you're going to write those tickers down. The ones that had the best technical setups, you can do that. Or you can do what I'm about to go do. And you can go scan for some sort of option flow. Okay. So what we can look at is, Let's go look. Let's go take a look-see, shall we? Let's go take a look-sees. Let's go take a look-sees. Okay, so I don't expect you guys to know any of this, but it's okay. One step at a time, guys. One baby step at a time. It took me, let's just say a couple thousand hours, okay? Let's just say that. So now what I'm going to do is I'm going to go through maybe just some of the option flow today, see if there's any idea that fits any of those 5 sectors or industries that we outlined. Again, I'm going to be going through, again, you don't want to scan for semiconductor flow. It's useless. So I'm going to look for something that's a little more actionable than semiconductor flow. So nothing here, not really interested in SPY flow either because, again, it's an indice. Flow doesn't really matter on that. I don't care about China flow either because there's no opportunity. Okay, nothing here. Nothing really of interest here. And what you're also going to look for is contra ideas to your belief. So you're going to look for orders that actually go against what you're actually thinking. And because the idea is that you could maybe see if it's the right timing. Maybe even the other side is the better trade. But again, this is a whole different thing. I don't expect you guys to know this. So SLV, Master, G, nothing here. So it looks like a lot of this flow here is actually kind of irrelevant. Now this is a good one. This is a good one. So this right here is actually a bearish trade on XLU. Okay, so I'm gonna keep that one. We'll talk about that one later. This is a bearish trade.
Wait, Rader, but it says calls. But Rader, it says call. How is it a bearish trade?
One day, Padawan. One day. Okay, so USO, this is an energy trade. That's so far out of the money. I'm not going to look at that. Okay, so as far as the flow, nothing really today. And I already looked at the flow over the weekend. I can promise you there's really nothing the rest of the day. Or there was really nothing last week. But what you can do is go through the flow, scan a lot of that, find an idea. Now, I already have some examples for you because every Sunday I write a report that goes over all these ideas. But that's that. So when you get to this point, right, and so this is where you develop a thesis. You say, okay, what sectors do I want to stay in? What's my focus? And so on the Rader Report, this is exactly what I outlined was this is what we're focusing on. This is what I want to keep my focus in. And again, I say focus in because it doesn't mean just blindly go long. Because each sector is going to have its own mega winners and mega losers. Now, why was there a major sell-off today? I mean, I wouldn't call 1% down on the markets a major sell-off. We haven't even broken the low of last week, so I wouldn't call that a major sell-off. But, it's just October, man. The volatility is expected. But as far as this stuff right here, so now we go and we find the strongest names. I have a long idea in software. There was some, my idea is long software. We saw that based off the overall performance. But was there any data to support that long software other than just strong technicals? Well, we can go look. And that's a perfect time to go look at something like the open interest. Go find some sort of support from the derivatives market that is shown. And what you can do is pull up something like the chain for crowd. And you can see, okay, now wait a minute. Look at this. Look at crowd. On crowd, you have basically all of the calls out of the money, at least all the major ones. What you also have is a 300 strike here, a liquidity attraction to 300. This is what you kind of can call a pyramid OI structure when you have a lower, higher, lower, big three abnormal OI on a strike. So when you have abnormal OI like this, pyramid, again, if you're a Rader Report member, you should know all this. But this right here, this actually is a liquidity grab to attraction to 300. So this supports a bullish idea. So now we have a piece from the derivatives market. We have my context matching, the rotations matching. Okay, we have the rotation. Now we have some support, right? Again, we went and scanned in the sectors, the industries, and we found the tickers with the strength, right? Now you can switch up the order of that. Maybe you go and you try to find, just the setup first. You filter by the setup, and you can see, okay, crowd, right? So we're likely to get to 300, and you can see we're right there almost. We're at the high. So it's pretty probable. So that's when you can go and justify the price action. That's when you can go and chart it out and say, okay, look, we have a good reason to long now. This is one of the strongest setups, right? It's not at the low, it's towards the high. It's one of the most beaten down, but it's one of the strongest. It's 50% up from its low on August 5th. So this is a very strong name. You can also go scan within, software and, oh, look, you'll find D-Dog. D-Dog was another one. Why is D-Dog good? Oh, would you look at that, right? A technical setup, a market maker cycle. This is called a market maker cycle. When you have a spring and a max pain in the other direction, you are very, very highly likely to go and break that spring eventually. Obviously, that's outside of expectations, so I'm not betting on that by 1018, but we still have a reasonable idea that this is still bullish because we've had a max pain point. Okay? So D-Dog is actually still bullish. And look at this. Look at the strength today. And that's something that we can go and, okay, can we justify it maybe a little more? Does the options market kind of suggest something else? And, well, kind of it does. We have what's called a descending wall to 140. Is that within expectations? Not really. So that's kind of that. Not by next week anyways. Or the week after. All right. So what you guys have to understand is this right here, okay? Notice how the charts are just a last resort to finding, or it's almost just a filtering mechanism. What you do first is you build a context. You understand the markets. And this is one of the harder parts to teach to you guys because it only comes through experience. Once you have that context, then you can go in and you can filter which sectors, which industries. Again, I'm just narrowing my focus. I'm going like this and I'm narrowing it down. Once you have those select sectors and industries, then you can go in and find which stocks have the best technical setup, which stocks have the most derivative support. What are the setups that are kind of aligning the most with the ideas, right? Which one has the most potential? Which one perhaps is likely a mover, right? That's what we're trying to find because you guys will see a lot of stuff in semiconductors, like I'm about to show you, didn't move today. But this guy found the ones that would. So what you do is, after that, of course, you can go and find these out and lay out the trade plan. So this week, Crowd, obviously, D-Dog, these are all both trades. What this also offers is almost a protection. When you know which sectors are going to long, because think about all these mofos who sat here today and they said, you know what, by golly, Andrew, I'm going to go long Tesla. It was up big last week. Tesla's not in play, my boy. Tesla is not the favorite of the market right now. Tesla is not the ticker that's being favored by the rotations, at least yet. So why are you wasting your time? More than anything, your time, not your money. Who cares about that? Why are you wasting your time to go long Tesla? It is not expected to move. It has virtually no upside potential. There's no edge to back it. Okay, you can debate, oh, but it has upside potential. Whatever. But it's not an opportunity that's going to make you outperform. A lot of you guys need to understand, traders, majority of our wealth is made from just a couple of trades. This year, some of my biggest trades were GLD. It was one of my biggest percentage trades, but also one of my biggest dollar amount trades. It was a big snowball for me. And that trade right there wiped out, right? So many future losses. You need to swing hard when you go up to bat. You only get so many home runs. And when you see that perfect pitch right down the middle, right at 90 miles an hour, crack, right? You need to swing. So you can't just be going and trading your favorite stock or the stock you saw on the news. That's not gonna. That's not how this shit works, man. Okay, that's not how this shit works.
But I saw it on Jim Cramer's. I saw it on the news.
It's not gonna help you trade, man. Okay.
But Rader, robo-taxis, do you not understand the future earnings cash flow and the potential of anonymous vehicles driving around? That's so much cash flow.
Who gives a who cares? The market's not worrying about that. Okay? So that's why you guys need to focus on these outperformers. And if you look at D-Dog today, did it move much? No. But it's green. At least intraday. So that's a form of defense. That when you get into these outperformers, when you get into the favorites, even when the market drops today, your calls are green. That's pretty sweet, right? I'm in SMCI, calls. I'm up 500%. The market's down. Guess what? If the market rips tomorrow, guess what's going to rip even harder? SMCI. If the market drops tomorrow, guess what's going to happen? SMCI might drop. Still up 300-400%. You've beat investing. You've won. You were able to hold positions in both directions and not be down on either one simultaneously. Damn. That's pretty good. Of course, that comes from flow ideas and things like that. Of course, this week, there was not a lot of flow ideas. Let me see what you got. Let me catch up with what your guys were saying. Hold on. You also have IG seasonal matching. Yes, absolutely. Juan, we got to talk about the other trades here.
But Rader.
Markets are scared of Rader. They might be. Understand the Kramer B effect is like trading 101. Well, you know, I will say this. Jim Cramer's been on an absolute tear. You have not seen any inverse of Jim Cramer recently. You know why? Because he's banking. Also, the Jim Cramer inverse ETF got delisted. The hype is fake. Jim Cramer's actually a G, bro. If you look up his performance track record, he's actually outperformed the market like so much. It's crazy. He's a legend. Okay. So type yes in chat if you guys are good with where we're at right now. Do you guys have any questions? Type yes in chat if you guys are caught up to speed.
But Rader.
It's because Kramer consults with me. All right. So, we're not over the age of 18. Yes, sort of, no. Yes. Okay? So, hey, we got 50% in the know-how. Please make a step-by-step. You should I mean, there's tons of videos, man. Just go watch. But I will say this, just sign up for the Rader Report. I explain a lot of it in there. Okay. So, where we're at right now is we're talking about, okay, we found these trades, yada, 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 okay? Now, I want to show you this a little more. This is an example on WFC. This is Wells Fargo. First, let's start from ground zero. Does it match a context? Yes. Banks typically do very well in October. Why? Well, for one, you have earnings. Earnings are typically pretty positive. But you also have the idea that banks didn't really get as much, they're relatively strong, but they didn't get a crazy amount of love compared to a lot of the other sectors. And if you go and you look at XLF here, XLF has kind of struggled in September especially. It really got rotated out of, and you failed to break the September high. Okay. So, especially over here, this was pretty ugly. It got rotated heavily out of August. So the banks have kind of been dragging. That's I shouldn't have said that. They've been kind of lackluster recently, okay? Now, again, you can't just go in long any bank. I can't stress this enough. You guys see XLF up, or we talk about, okay, we went along XLF. If you went along today, you would have gotten roasted. But there's certain ways around that by finding the favorites of the rotations. And right here was a trade on Wells Fargo. This one I'm currently in. Swinging, of course. This right here, you have a very strong close. When I was filtering the banks, when I was going through, okay, what banks can I look at? All right, I'm going to go look at JPM. I'm going to go look at GS. Which banks were I looking at? I stumbled across WFC, and this one was very intriguing to me. Why? Not only did you have one of the biggest rotations into it last Friday, one of the biggest green days of any bank, but you also had this structure. And this structure is, lack of better words, it's very nice. It's very bullish. You're at the liquidity level. You've been chopping all the way up. This area is draining the liquidity attraction here. So when I first saw a setup, I was like, okay, so this is pretty good technical setup. Is there any derivatives to support this? Is there any imbalance? Is there something that can, oh, look at this, right? This is perfect. So this right here is what we refer to as a liquidity void. When you have a lot of open interest, boom, boom, both sides, and then all of a sudden, this little pocket of nothing. This is called a void of liquidity. And what happens here is often markets pick up in velocity. Markets pick up in how fast they move. Okay? And that's exactly what my trade idea is that I plan to long this, catch a big gap up of some sort. Okay? Now, that's all good. I've talked all about how to find tickers. Okay, I'm filtering down. I'm looking for strength. I'm looking at the option flow. I'm looking at the derivatives market. Is there an imbalance? Is there an OI structure? Is there something along the lines to hint why this ticker on WFC is good? And again, I can't stress this enough. If you go and look up something like Goldman Sachs, this is bullish price action.
Rader, that's a hammer candle. Look, it looks like a hammer. It has the big...
Dude. Okay, it's bullish price action, but do you have anything to justify why this setup is better than all the other banks? No, not really, right? This didn't have the biggest day. This didn't have the biggest rotation into it. It's got some pretty ugly structure. Hasn't even, come close to the high yet. It's weak. GS is weak. Okay, go look at something like MS. MS is strong, but it's already moved a lot. It's kind of, it's kind of hard to trade. But when you look at WFC, okay, this makes sense. We have earnings coming up, so maybe we get a run up. You also defended this low, so maybe this is the liquidation. Now you just need to come up and break this. This is pretty good structure. You had a huge green, strong pump. Do we have anything to justify why this is better than the other ones? Certainly. Versus the other banks didn't have quite as convincing OI structures as that liquidity void did. Additionally, you had the biggest rotation out of majority of other banks into this one right here on Friday. Additionally, the price action structure is pretty nice. I mean, you have, I don't expect you guys to understand this, but the less structure you have, actually the better. So in this case right here, you just have a chop up and then you have just this big flush. So this is actually really good to move through. So right here is exactly what you want to look at. Okay. And again, I longed banks. I'm not down at all in these really. I think a break even. I haven't checked. I'd have to check after hours. Because I was just checking on this at lunchtime. I didn't look at the close. But then you go look at something like XLF, you would have gotten smoked. So that's why it's so important to hunt down the outperformers, guys, because not only is it a form of offense, it's a form of defense, that you're protecting your positioning power by being in the names that move the biggest. Okay. Now again, SMCI, this was the ticker I took today. I'm still up. Holy shit, right? Before split, if this stock had not split, this would have been a 1,500% trade most likely. But since they split, you get less on these bigger moves, unfortunately, because of how the strikes work. But this would have been insane. I mean, it would have literally just been insane. Anyway, so that's that. Now, this was the trade of the week. This was semiconductors. I did a whole analysis. Again, this is on the Rader Report. I did a whole analysis of the options market, why this is a good one, why I believe this would be the favorite of the rotations. Now, Juan mentioned earlier, what about the other names? They're not moving, whatever. I had two names. I had TSM. TSM worked out today, so this was good. If you guys caught this one. So hopefully you guys long TSM. I was in this one, and I also had semiconductors, or not semiconductors, SMCI. So I had SMCI and I had TSM. I sold majority of this one, actually. I'm not as confident as this one. He put well, yeah, Wells Fargo. So that's this. So TSM was a very good one, but this was the same principle that, I went and I scanned for the strongest semiconductor names. You look at something like, okay, do we want to go long Intel? Hell no. There's nothing to support that idea. This is weak. It's not towards the high. It's not closing strong. But when you looked at something like TSM, oh shit, right? Look at this. Look at this. Strong close off the low. You have the least amount of structure. This is more likely to move. So this is why I long TSM. So I'm up on that one as well. You had a 1.5% day today, almost 2%. That was that. Okay. Now, there's some other ones like CAR. This was kind of a financial play as well. I'm also in this one. I entered this one at close. Now, here's where the tricky part gets in, okay? You have all these trade ideas, Rader. Great. You planned out the charts. You planned out, which sectors to be in. You did all this great work, Rader. But now is the hard part. Because now you have the ticker, you have the context, and you have the direction. But now we have a big problem to solve. And that's direction. Or that's, I fucked up the good quote, man. I could have had so much aura if I didn't mess that up. But now we need to find timing. Okay. You guys need to find timing. it's not just about why this idea is the best one. Why is this the strongest one? Why out of all the banks move? Why out of all the banks, or why out of all the semiconductors is TSM and Semiconductor? I need to stop saying that. Why is TSM and SMCI? Why are those two the ones to move? Or we know why they're the two to move, because they have the best option support. They, you know, all these different setups. They fit the narrative the best. But when is that move going to happen? When is the best time to get in? When is the best time to position in? That's the hardest part of this all. It's the hardest part. The actual timing is the hardest part. The idea, everything else is, you guys will realize after a few thousand hours of working in this and doing this. I've probably been doing this 10,000 hours, close to it at least. I mean, I've been doing this 6 hours a day with my mentors, pure studying, not even trading, just pure studying 6 hours a day back when I was in high school with flying out to the Bay Area with my mentors. I did it 6 hours a day, virtually until I got to like spring break or Christmas or summer, and I would fly out there for 3 months. So I did this 6 hours a day, just studying, just working, solving, doing these different things. Of course, I wasn't good at it back then, but so when timing is everything in trading. So this is where the difficulty rises, and this is where you have to be extremely precise, extremely disciplined, extremely knowledgeable. Not many people survive this stage of the trading. How I plan to trade this week was as follows. Okay? And you can use different tools to come up with these ideas once in a while. On the Rader Report, we have a seasonal section. This right here. Every September, this Monday is one of the most consistent red days of the year, or at least the month. 33% chance that this closes green. That's it. So you want to be on the right side of the odds, right? 70% chance that this closes red. 70% chance it closes red. So if I'm trying to long something, it's going to be tough to justify why you should long it on Monday. So your thesis should be that you long into the close of Monday or Tuesday midday to open. Now, this is a pretty challenging week. You can see majority of the time, a lot of these are actually red days. But the third week into this October, we typically see some really crazy days. So is this week the week that crashes? I don't know. But what I do know is that I want to play some risk. I want to position in, you know, a lot of people are going to be waiting for the FOMC minutes. But the problem with waiting is the move's going to happen without you. You're going to enter too late. So you need to have positioning power before, so that when the FOMC minutes come around, you're already positioned and hopefully up on the positions you desire, so that you have some cushion. So that if those numbers go against you, or the direction the market goes against you, you have some time to take a small loss or come out on top, green, just a little green. So timing is everything. And my thesis this week was I was actually going to wait to long things, at least the banks, software, things like that, especially software, until after Monday. And I expressed this very clearly, especially with the software names. I said, if Monday turns to be out an inside day, regardless of whether it closes within the orange zone or not, I will enter 1018. So a lot of these names are mentioning Monday. I was saying after Monday, like right here. I said, I believe the best time for this will be waiting for a drop Monday and Tuesday, then playing the continuation for 1018 at them money calls. Okay, that's a typo, but you expect typos in quality reports like this. Okay? So I'm timing my trade. My context is around, I'm going to wait for Monday. Now you might ask, why did I long semiconductors today? Well, these were continuation trades. And most importantly, if you gapped above this golden zone here, this was actually the gamma flip. And this was more than likely to see, and I expressed this as well, that I said, the other scenario is that there is no max pain flush down, and that SMCI opens into or above the golden zone. Boom, just take it. Okay, so that's what I did, and that's that. Now TSM as well. This was a challenging one as well, but that was that. So any gap up into this was really the best deal here. And I said this trade is purely a momentum play, like other semiconductors. Playing the continuation is the ideal scenario versus buying the dip. You don't want to wait for a strong, and this is also a big problem with retail. You don't want a strong stock to dip. You hear all these guys go,
well, Tesla is pretty strong, but I'm going to be the smart one and get it at a dip. I'm going to wait. Do they ever buy the dip? No. They just wait. They stare at it, and they notice it goes up and up. And what do you always hear on Twitter? You hear, I was going to buy the dip, but my wife walked in, and then she slapped me and said, why are you, I was going to say something outrageous.
But that's that, okay? So retail's always waiting. And that idea with SMCI, that idea with TSM, it was purely timing, right? It was that, well, if I want to time a move, any gap up likely is the best time to do it because this is a continuation trade. And if I'm going to try to time a bullish trade on it, why would I wait for a dip buy on something that's strong and already starting to break out? That doesn't make any sense. And you hear all these morons, okay? I want to be respectful here. Morons talk about, I needed to retest. How many times have you heard I needed to retest? A strong breakout doesn't retest. Why would a strong breakout come back to the place it broke out from? Do you not see the logical fallacy in that? I'm going to take astronauts to the moon, but I'm going to launch the rocket, make sure it works, and then I'm going to land it and then pick up the astronauts, and then we're going to launch it again. Motherfucker. It's going to the moon. Okay? It's just better. Just go. Okay? Waiting for a retest is going to get you clapped. You're buying a weak breakout. Stop waiting for a retest. And that's why a lot of my trades wait for gap ups. That's why a lot of my trades, everything I do is focused on timing. It's all about timing. It's all about timing. It's all about, okay, so Monday, right? Let's put this all together. All right, hold on. Are you guys, okay, this is a lot of yapping. Okay, hold on. What's up, CDP? How are you? More negative aura for impersonating me. What do you mean buy the dip and the dip keeps dipping? Send it to the publisher, bud. Okay, so I actually have brain rot TikTok chat members in my chat, bro. This is crazy. This is like a TikTok. These are guys sending galaxies to their hot tub streamers on TikTok. These are the guys sending galaxies in chat. And they have little sub badges next to them. Okay, type yes in chat if you guys are clear with where we're at right now. Okay, so let me put this all together for you guys. Okay, I'm gonna spell it out for you. Okay, are you guys ready? Yes or no? And then we'll go to bed. Let me know if you're gonna copy my trades in the Discord. TLT and SLV. You are so late on those two tickers. And Juan, as far as the D-Dog and everything else, hopefully you caught up on what I was saying there. But those names I'm planning to enter after this week. But again, I have to see strength. It was too risky to enter on one of the most bearish days of the year, at least, or bearish days of the month as far as consistency was. So do you see how I'm waiting for that? Hopefully you picked up on that. But that's kind of, and I kind of mentioned, reference the seasonal channel because you guys have to read that. It's super important. And even when you guys get good, you can actually build expectations within the seasonals. Like I can plan out this entire month for you week by week. It's already planned out. I already typed it up for the Rader Report. Like literally week by week. I have what tickers to play, everything else like that. It's all season. It's literally on a timer. And it's going to be nice. TLT paying me nicely currently. So you're shorting TLT. All right. Don't let him spook you out. Double down. Abstract, aren't you guys both? Okay, so Abstract, your username is Professor. Hands is in here too. And then you guys also have another guy joining. Okay. TLT is going to pump. I just got calls today. It's going to take some time, but again, my outlook is for April. All right. So here's all of it summarized for you guys. Okay? I'm going to draw this out for you. Okay? What we start with first is some sort of context. This is the global view. Okay? This is where you're looking at the markets to understand a few different things. You're understanding what is going on in the market. Is there seasonal? Is there the Fed making moves? Is there what has changed about the market environment? And no, this is not news. No, this is not, and by news I mean, no, this has nothing to do with the Middle East. No, this has nothing to do with your favorite president candidate. No, this has nothing to do with, Senator blah, 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 tweeting out blah, blah, blah. It has nothing to do with all of that BS. What it has to do with, what is the market actually driving towards? Or what is it actually moving towards? What is it positioning for? Is it the Fed? Is it, the Fed cut basis points? That's a huge change in market dynamics. So you should be paying attention to that. When we think of rate cuts, we think of small caps, biotech, solar. We think of banks. We think of all sorts of things like that. Okay. You also need to be focusing on, is there a big seasonal period? We're in October, extremely volatile, but you also need to be focusing on something like the market cycle, right? What is the market favoring, right? What is happening? They're rotating out of mega cap. You just need to know all that. Okay, whatever. So that's the context. Now what you need to do is you need to go in and you need to hunt down. So we have this context. Let's narrow it down. This is the funnel, right? This is the funnel. We're in a funnel, okay? It's a multi-tiered funnel. And this is the gold down here, okay? Okay, that looks so wrong. Okay, I'm going to just back that out. But as far it's just outrageous. But as far as this right here, once you find the context, now you can narrow it down. And your job is to find out, where are the sectors? What sectors, what industries do I need to be looking at? What is in play relative to that context? The context of right now, October. October is volatile. Stay the frick away from SPY, QQQ. Stay away from that. That's not going to make you money. Move towards the rotations exclusively. Move towards the names that are getting the favorite rotations from quad witching. Software, energy, banks, airlines, okay? And all that good stuff. Now, if you looked at airlines, I forgot to show you guys this. If you guys look at something like UAL even, y'all been missing out on some of the biggest trades of this year, right? UAL, DAL was crazy, okay? But once you find out, now you have sectors, now you have industries, right? Now you have some sort of idea of the rotations, okay? So once you find the favorites, you're finding the favorites or the unfavorites, right? This doesn't even look like it, but you guys get it. Sectors, industries, you're finding the favorites, the non-favorites. What are they selling? What are they buying? Once you get that, now it's your job to flip between the options / the flow and technicals. You're going to be simultaneously flipping through these. You're going to be comparing technicals to options, options to technicals. You're going to be doing that over and over, and you're going to be scanning. You're going to be trying to find the names that match these two the most. You're going to be finding the names that match these two ideas first. And only then is price action useful. That's when it's useful. It's not useful over here. If you guys just look at charts over here, you're going to get clapped. You're just going to get bent over at the Diddy party. Okay, sorry, that was inappropriate. But you're going to get punished, okay? You're going to get oiled up. I shouldn't have said that either. You're going to get punished. This is what trading is, okay? And I love to come on here and show this to you guys because I think a lot of trading is plagued from you guys being misled. You guys are following guys who pick up a stash of cash and go, if you want to make passive income, bitch, follow me. And they just shit on you. They put a cash in your face. Brokey, broke. You guys look up to people like Andrew Tate. Well, I don't want to say you guys because you're in my chat. Andrew Tate is a clown. Why? Real leaders don't walk around with their shirt off saying racial slurs all the time, flexing on their followers, flexing on other people, feeling like they are the superior human being. No, real leaders are real men. Real leaders are men that are quiet. The quietest men in the room are the most dangerous. That's what they say. It's the men that are calculated, the people that value the people around them. They have respect. They have morals. They have integrity. They have a killer inside of them, though, right? They have a vicious urge to better the world, but they're fierce to do it. Speaking to you men out there, ladies, it's a different world for you. But a lot of people look up to that. Even in trading, a lot of people look up to the guys with the most money. In trading, sadly, P&L is not a judge of a trader's skill. And it's kind of weird to say that. But when you start to say, well, let's say someone is a losing trader. Oh, haha, he must not know what he's doing. But what if I said he's losing for the last 3 months? Haha, he's not, he doesn't know what he's doing. But then I say, oh, but he made, $400K last year, and he's down maybe $200K these last 3 months. Does that make him a bad trader? Just because he's on a losing streak? Or maybe if he's not profitable at all, let's say he made 12 million and he's back down to zero. Does that make him a bad trader? Well, he made some mistakes, but does that mean he's a bad trader? It's kind of challenging, right? You can't judge a trader by his P&L. There's some of the richest, wealthiest finance people in the world, like Michael Burry. They don't know what the hell they're talking about. Michael Burry doesn't know shit. Michael Burry is clueless. You're better off having your goldfish pick your stocks. Michael Burry hit one trade back in 2008 and everyone worships him. One trade, that's it. You don't know his P&L. You don't know what his success rate is. You don't know if he's actually even making money anymore. He's got assets under management, so he's making an income. But is he actually growing that? Is he growing that? Is he actually making more than 27% a year? That's challenging. But you guys look up to a lot of the guys who are misleading you, and you're being misled. And I have sympathy for people like that. Because the way I was taught a system that worked from the get-go. I was taught a system of how to actually find what the markets were telling me, to speak the language of the markets. And this is part of the reason why I won't become big on media. I don't think ever. Because everything I talk about is not mainstream. It's not marketable. You can't market this. Why? Because people scroll off, he's too complicated for me. They want the buzzwords. They want liquidity grab. They want liquidity. They want, and they want all those buzzwords, right? I don't do that. I just show you how the market works. I show you what I do to beat it. I show you how to find the trade ideas. And that's all I can teach. That's all I can show you. Everything else is up to you. But I have sympathy for people who are misled, because a lot of this trading industry, they won't tell you this stuff. Because number one, they don't know how. Number two, they're at some firm, some hedge fund somewhere, and they're not even on media. So who gobbles up all the media, all these guys who are better at marketing? That's it. So I really push you guys to question not only what you're hearing. If you ever want to judge someone, if they have integrity, maybe you have other favorite creators. And I'm not here to say that I'm the all, be all, end all. But what I will say is this. If you want to judge someone, don't judge by their P&L. And I say that in defense of other people who aren't necessarily profitable, because there are other people who are profitable who know what they're saying. But judge someone by their character. Judge someone by how they're speaking, why they say it, how they say it. A lot of the stuff, hopefully by now that you guys can see, I don't do this media stuff for money. Okay? I've really never been paid $1 for money. I think outside of Bar Chart, who paid me for a few videos with them, that's it. It was like $400. Okay? So a lot of what I'm doing today is I'm hoping to reshape that. And I didn't even do media until my mentors actually pushed me to. They said, you know what, you're young. Why don't you go do media while you do this stuff? Go show people how we trade. So I did. My mentors don't have media. That doesn't help. That doesn't help the trading community. But anyway, you're an excellent educator. I appreciate it, man. And a lot of the stuff I do as well, hopefully you guys can see, I'm a pretty big nerd when it comes to trading. I'm like, this is what I do all day. It's just what I do.
Okay, I'm not sitting here on my computer, but a lot of my thought process throughout the day is how can I beat markets? What's the next move? Okay, and the next move in my life is potentially even doing. I don't want to announce it yet, but there are some emails back and forth for potentially working on a floor soon. So the challenge for me has been finding a prop firm, like a physical prop firm, not the corny ass digital prop firms. Also, I want to talk about that after this for just a second, then we'll go to bed. But an in-person prop firm, like a actual floor. I'm gonna talk with them for, I have to do some more things, but it's actually been kind of challenging to find one that's accepts me doing the Rader Report and media as well on top of working with them. So I said that was a big requirement for me was let me do the Rader Report in media, obviously, so I can share it. And there have been some firms that said no just because of that, but that's that. So we're gonna be doing the ICT. All right, get them out of the chat. My mentor is your mentor's mentor. Sorry, dude. But yeah. So, moral of the story, guys: don't fall for all the BS out there. And I also want to highlight this. Please stop going to try to believe that money is the fix of your problems. My mentors told me this, and this is all I'm going to say, other than one more thing. Money will always be faster than you. Hold on, I need to get real close for that motivational quote. Money will always be faster than you. If you spend your whole life running, trying to catch up, you'll never catch up, okay? Money will always be faster than you. Spend your whole life trying to catch it, you never will. But if you leave a trail of value, money can follow you. Well, how do you think if I had 100K right now, I'd be good. I'd be $1 million. I'd be good, man. I'd make all the smart decisions. The money you have right now trading is what you deserve. You don't deserve a penny over it because you do not deserve the money you're currently trading with. What you have right now, if it's $20, 20 cents, $1,000, you'll find out very quickly how much you deserve. That's the harsh reality. So instead of focusing on, I need to refill my trading account, I just need to hit that one big trade. Even when you 10x your $1,000 account and have 10K in your portfolio, you'll still find a way to lose it. That's a guarantee. 100% guaranteed. So why not avoid all those losses and go the academic route? Why not learn this stuff slowly over time? I got lucky because I learned at 14 with my mentors when I was going into high school. I was 15. I was 15 going into high school. They took me under their wing. I got very lucky with that because when I was younger, it had me curb all of those bad habits because I was just getting into trading. I was like, this was kind of something I was passionate for, but I hadn't known anything about it. And not until I was older did I realize, oh shit, this is quite a blessing that I got this at such a young age, at this level of quality. So when you go and you try to chase prop firms, I also want to express this. I saw on Twitter not too long ago, in the world, on the biggest prop firm funding website in the world, less than 10 people in the biggest prop firm funding in the world, digital, online, less than 10 people have made over 100K this year. Less than 10. Yikes. That is rough. That's not normal. Especially for a proprietary firm. So don't think, even if you get those firms, they're built against you. They're literally built to make you lose. Go the education route. All right, guys. I was one of them. All right, guys. That's pretty much it for tonight. It's pretty late. We have to all trade tomorrow. Hopefully you guys are a part of the Rader Report. And I want to say this as well. I've received a lot of support for the Rader Report recently, and I just want to say a huge thank you to everyone. This is an online terminal I'm building for you guys. I'm actually building this for you. This is your platform. When you contribute to this, when you subscribe to the Rader Report, I'm actively listening to a lot of your feedback,
And I'm actually still adding a lot of tools that I believe add edge to your trading. I'm never going to add something to this that's not going to give you edge. That's just a reality of it. I'm always going to give you my absolute most quality, outlooks. I'm going to give you my most quality analysis. This is a reflection of my trading. I take all the trades on the Rader Report when they, of course, if they work out or if they don't, as long as they hit entry, things like that. I take all these trades on the Rader Report. But also, if you want to sign up for free, you can sign up and you get to see my SPY chart every week for free. And you can just compare, see how your charting is relative to mine. Okay? Because I can tell you my charting is pretty damn good. Okay? Also, why is my SPY chart not updated? Oh, okay, it is. There it is. Okay? So that's that. And also there's like a video section I've been doing a lot of private meetings with. Also, we do an October monthly meeting. We have another monthly meeting next month, but I'm going to add a bunch of series to this. I'm doing a bunch of series to this. So these are like private lessons, things like that. But the idea behind this is you guys are literally funding your own tools and stuff. Like I literally pay $6,500 a month to run this. Okay. So for stock data, for my own subscriptions, for everything total, it's about $6,500 for me a month. Between all the data, between all the subscriptions, between all the black boxes, Optima, Bloomberg Terminal, all that stuff, it's $6,000 a month. $6,500. It's like 6,620 something. So this is quite literally funding your own tools here. So I'm gonna build this platform out. There's gonna be a lot more that's coming. But of course your feedback and everything is super important. But I do try to explain why the derivatives market is so important, why open interest, things like that are also invaluable. And there will be plenty of tools. And I'll give you a hint. Since you guys stayed this late, you deserve it. Let me show you something. I showed a tool earlier in the stream known as Koifin, which we use to look at the rotations. Right now I'm working on, just give me 1 second and I'll send you the image. Hold on. I'm working on this right here. Give me 1 second, guys. 1 second. Give me one. Okay. So this right here is the tool I'm working on. So this is our custom platform. And what's going to happen here is you're going to be able to compare relative performance. So you're going to be able to see the rotations, but you're also going to see all the holdings within them. So like when you hover over them and stuff, you'll have a drop down and you'll be able to see the top holdings, etc. So it will vastly increase your scanning speed, but also it's like you can click and drag and narrow down your time frame, your ticker, what relative performance you're doing. So relative performance is an incredibly powerful tool and something that I look forward to sharing with you guys in the future. But other than that, guys, thank you so much. When you have a change, take a look at T2. It does look similar to DDOG IGV. Let us know your opinion. Sure, I can just look at that real quick. T2, I would say this. Mr. Wan, there's too much structure. Whenever you see something like this, it's strong, yes, but this has a lot of structure. And each one of these is going to be a resistance level. And that kind of makes it kind of a stair step up, typically less than a breakout. Whereas you look at something like crowd, the sky is clear. This can have a much bigger day because there's absolutely nothing over here to restrict it. Additionally, if you look at DDOG has a much clearer skies. It's already going out. There's a huge gap here. There's not as much restricting it. So whenever you see more structure, for example, if I look at something like LMT, the more structure you have, the worse it is. So look at something like LMT here. Whenever you develop this crazy structure like this, when you break down, it's very hard to get to the right place, right? Even over here, you can see, oh, we're breaking out, but are we really? Like, there's so much structure here. There's so much chop. It's very hard to get going in stocks like this. So whenever you see those big structures like that, even here, right, you had a flag, you start to break out, but you couldn't do it. So I tend to stay away from stocks that have that crazy structure like T2, which again is I actually looked at this one, but that's that. I believe also they're Chinese. I'm not sure. But this is something that's strong, and I would have said, you know what, this looks good. It has a max paint structure, but I question how much it's actually going to move. I could be wrong. But I do question. I looked at this and it just was not as attractive as the other ones. Okay. I need to be a mod. All right, I'm making you mod. Add as moderator. I'm gonna keep abstract as the head mod, and you'll be the goon mod. You'll be the gooner. Abstract is the head mod, and you are the regular mod. Okay, so abstract still has more power than you. Now we can see the whole screen. Wait, can you guys see the whole screen? Yes or no? Can you guys see it? Let me know. Guys, can you see the whole screen? Gooner? Okay, I forgot what that meant. Stop. Guys, type yes in chat if you can see the whole screen. Can you guys see it? Yes, yes, you can see the whole screen. Should I keep it like this, guys? But very little? No, it's big. It's big on my screen. What are you talking about? Abstract, is it not big for you? It's big for everyone else, right? I mean, this is literally big on my screen. Do you guys see big? Type yes in chat if it's perfect. Guys, you guys are supposed to be the expert goons, okay? I was trying to troll. This was your perfect opportunity to troll and you blew it. The clip is over. It's crazy. All right, guys, it's 12:30 for me. I want everyone to have a great night. Remember, please be smart. Please be intelligent. Don't go running out believing that trading is about hitting one big trade. It is a long journey. And I will be the first to tell you that. Trading takes thousands of hours of not just sitting in front of your chart. No, that doesn't count. That's another few thousand hours. It takes thousands of hours, hundreds of hours to master some of these concepts. Just one concept. Some of these concepts take a long time. But you can speed up your learning curve through a variety of different methods. And I like to think that a lot of people can do it if they understand a lot of the stuff I talk about. But please be safe. Do not go out there, blow your money. Don't go out there and believe that Johnny's got the best course for you, or you need to go join the mastermind. Okay. My head's big. Look how big my forehead is. And oh boy, did my barber mess up too. Okay. He was staring at, look at my barber, right? Oh, my barber killed me. But at the end of the day, I'm up. Who up? All right, guys, get out of here. Have a great night. Bye-bye. 10 push-ups. All right, everyone get out of their chair. Now, first of all, I don't want to hear anything about chicken legs, okay? I don't want to hear anything about chicken legs, okay? Someone said I had chicken legs on stream the other day. All right. Let's see who runs faster. Let's see who lifts fast more. Okay. Every stream we try to do 10 push-ups, okay? So if you're in bed, if your wife's next to you, husband maybe, try to get up and do 10 push-ups. Why do we do 10 push-ups? Even if you don't want to, even if you're in your coziest outfit, you're in your coziest bed, get out, do 10 push-ups. If you can't commit to doing that right now to better yourself, give up on trading. You will never be able to beat a $70 trillion market. You have no chance. If you can't make yourself do 10 push-ups, you're not going to be able to make yourself learn the proper processes, do the proper things to actually beat a $70 trillion market. Get down and do 10. Here we go. Huh. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. All right, guys. That's it. Have a great one. Bye-bye.